How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. Welcome to May. The pair that we're going to be tracking for May 2024 is British Pound versus US Dollar, GU. To begin with, some macro information. So the Bank of England, they have an interest rate of 5.25. The Feds, they have an interest rate of 5.50. So there's an interest rate differential of 0.25. So the fact that there is an interest rate differential, this pair is most likely going to move. Not saying it's going to move more than other pairs, but for our selection of this month, because we've done EU already, I believe we've done AU already. So those were definitely ideal pairs to trade. So we're just moving on to another major. So GU is going to be at seasonally as well. It fit the line of filter because seasonally they are moving inverse to one another. As we can see, we got British pound for May going down, and then for the DXY, we got it going up. So the seasonal tendencies are showing me that they're moving in its correlation, and hopefully we're going to get a symmetrical market, and the markets move and follow code. So if we were going to anticipate price going lower for GU, as always, we would set up with our IPTA look back data range. So we start at the beginning of the month, and we would count back 20 bars, which essentially is 20 days on the daily time frame. 40, and 60. We'll mark off the highest high and lowest low in each one of those quadrants. We'll mark off the opening price because it's going to be our premium and discount range for the monthly candle. Anything above it is going to be overbought and it might be ideal for selling. Anything below is going to be oversold and it might be ideal buying conditions. Now, if this market is going to range lower and sell lower, I would prefer it to go up and then go down. Does that mean it may run up and take out the 20-day high? Possibly, yes, and then go short. But I would like to see after it breaks some type of buy side liquidity pool or a counter liquidity pool, because if our analysis is a higher dollar DXY and a lower British pound, that means we want to see counterparty. So raid some type of buy side liquidity pool and go short or trade into some type of inefficiency. We play it forward to where we are currently in time. You can see this is where we are. Play it up one more time. And this is where we stand. So recently we had that break on this swing high. And we guys know that we like to define the swing points as momentum indicators. So natural price momentum indicators. So if price were to break this swing high, we either classify that as a bullish momentum or bearish momentum. And in order to confirm that, we want to see after breaking that swing high, is price going to produce a higher swing low to continue trending in that bullish momentum? If not, this can only be what? A false break potentially. Get traders long above the opening price, let them buy and chase price higher, and then they sell. Currently, right now, we can see that the Monday New York model gave a sell opportunity. So we're going to briefly glance at that here. Price was above Sunday's opening price. We know Sunday's opening price, where we are, right here. Price is way above Sunday's opening price. As you can see, we'll go with that red line that we have here. Since we're above it, we're in a premium for the week. We're in a premium for the month as well. The New York model runs up and takes out the London lunch swing highs here, swing high here, swing high here, and then it sells off. Notice what happens after breaking these swing highs. If you go down to the lower time frame, you're going to see our classic entry technique as always. It's going to be a fair value gap that runs through a swing low. You see it forms right here. And it forms above 7 a.m.'s opening price here. That's 7 a.m. It's forming above it in a premium of the kill zone, a premium territory of the kill zone. The entry idea is forming after rating that buy side here and buy side here. You can see it's here. I just didn't mark it off. But after breaking it, we get that entry or that sequence, and price continues and hits it and goes short there. I was late to the session. I was able to get the short. Showed you guys that in the channel that we have. and it continued to sell off, and it finally got back down to what? The sell side below the London lunch. Normally, this is going to be consolidation. We talk about this all the time. The dead zones typically will give the market sentiment. Buy side orders are building up, sell side orders are building up within that little small pocket of window here between the London and New York session, that dead zone. Don't trade here. Not saying there isn't trades there, but less likely to find a trading opportunity here. So since then, we got price selling off, right? GU selling off since they're going into the Asian session, running up and then selling again. So right here, going into the Asian session, it runs up, runs some type of buy side liquidity pools. You see here, these clean highs, price runs up in Asian session, runs up, and then goes short again. So anytime a shorting opportunity presents itself, I prefer it to run a high first or clean highs first and then give the short opportunity, right? That's if your narrative is bearish. That's what the default should be. That's the protocol. If you're looking to go short, it needs to be in a premium territory. We need to be breaking buy side liquidity pool. Now, the entry technique may not be the same as mine. You may look for a different entry technique. I prefer to keep that one because it's very simple and quick to see. It may not happen, and I may miss the opportunity, and you have to live with it and move on, right? Going back to the daily. So right now, I want to see if price is going to continue to sell off and move back down. Are we getting a top above the opening price? Because one of the characteristics to a bearish month is that it forms a swing high above the opening price. Now, what is the dollar doing? Is the dollar going up? That's something we have to take into consideration. So we'll check out the DXY briefly. And we can mark it up. So we'll go May. So generally, the first daily update to a new month, I'm a little more thorough and I'm going to take my time. But as we move on, as the episode's going, it gets simpler because we don't have to waste so much time because we're in a daily time frame and we're trying to project what's going to happen in the next 20 days. Because every 20 days, the market's either going to chase a new liquidity pool, whether that's buy side or sell side. The market is going to chase a new liquidity pool every 20 days, or it's going to just be in a range back and forth. Even when it ranges, it's still rating, internal, external liquidity. But on the higher time frame, it could just be consolidating and accumulating for a bigger move. If we take the IPTA levels, she would go with the highest high we have in the last 20 days here. The lowest low we have in the last 20 days from the beginning of the month. Remember, the first official trading days where we're starting our IPTA look back here, May 1st on Wednesday, then looking back. You got this 40-day high that price just tapped into, old high. Even though the high is ran through already, still an area price can return back into. I know there is a inefficiency here too, but keep it in point, this old high. You also have this one here too. Look at that, another old high price is trading into. That's significant to the IPTA look back data range. 40-day low. And where's our 60-day low there? Then we got the opening price for the month. So anything above is a premium, anything below is discount. So if the market makers are going to buy dollar, it would be ideal to drop it first and then push price higher. Anybody that was in control of the price action would want to do that because you would induce traders, create orders, generate liquidity, raid orders as well, sponsor your longs, and then take it price higher. That's how the game would work. And that's how a lot of the bullish months work. Look at April, for example. Look at April. This is the beginning of April here. Notice how it dropped. This is the opening price. Just mark it off real quick. This is the opening price of April. Look at how it drops below April. It prints some type of swing low formation, and then it turns around. There's a turning point, and price goes up. But at said point, a lot of retail traders were looking to probably what? Go short. Or maybe even at the beginning, they went long, but then the market goes short on them, and then they jump out their longs, they go short, then the market goes long on them again. So it can be pretty tough navigating the market, but if you have a objective in mind and you have a stance on what the month should be doing, then you start to look for those opportunities that support that thesis. And now if things start to fail and you start to see that this thesis is not coming true, then maybe it might be time to stick to the sidelines, look at a different pair, or change your thesis, go opposite to what you think. So if you were looking for longs, maybe you should go short or sit on the sidelines and wait till things get much clearer. Right now, we had ran a swing low for the DXY, and that can be classified as what? Bearish momentum. We also are trading into a PD array. I know that's there on the chart. A lot of people like to point out the obvious sometimes in the comments, like, oh, you're so blind, you didn't see that. I've been trading for a while. I think I would see it, you know? It's just that I don't need to mark off every single thing on the chart. Price comes down, takes out this swing low. This swing low can define bearish momentum, but if price is going to continue this bearish momentum, it needs to print some type of lower swing high. It can do that trading back into an order block theory, one of these up close candles, and then trading back down, making a lower swing high and price selling off. But if it indeed is not going to go lower, then this would be what? A false break. Because we either take one or two scenarios. It's either a momentum shift to the downside, or it's a fake move to get traders short to then push back long. That's how I like to gauge it. And you got to be patient for these things to unfold at times. A lot of people like to rush. You got to be patient. And the signs are normally going to be in the swing points. You can start to get a clearer picture once the swing points start forming, because it only takes 3 bars for a swing formation to form. So within, every couple 3 days, within a week or two, you're going to see, okay, whether or not the market is really gauging itself to go higher or gauging itself to go lower. And you can start to take a stance. And that's how we would do it. We also would look at gold, but we're going to talk about that at the end of the week, probably on Fridays, on our Forex Fridays nights when we do the live Zooms and stuff. So this is it for now. Currently, just a real recap, bring it back home. We want to see if price is going to continue to sell. So I want to see, we've been breaking previous daily highs. Do we start breaking lows now? And do the highs start becoming protected? Does price not want to run back up to this high up here? Let's see. Let's see if price is not going to get up here. Because we just rated this. We'll put an X there. We'll put this here. This is my new favorite thing to do. We just rated buy side. I want to see now if price is going to get back down to potentially this swing low here. So we'll put this as a target. It's my new favorite stickers or emojis now. There we go. Sell side. We even have one down there too, another one here. But if it's going to get to this one, I wouldn't be surprised if it draws down to that one too as well. And we'll see. And we do have that BPR too. So maybe we want to trade back into that. Let's see. Previous daily lows. So Monday's low, last Friday's low, Thursday low. Let's see if we get a large candle to the downside from small to large. If you got some news events, let's see. Let's put them on. We only want to see the future one. If it would show up. There we go. So this is very important. So we got an interest rate decision on the 9th. So that's a Thursday. So be prepared. Possibly maybe Wednesday or even today could be large, but just be prepared for the interest rate decision, because the interest rates are what controls the bond yields, and the bond yields is what persuades or makes central bank traders want to invest with the currency. So for example, Japanese yen is a currency that is not valued high because it has low yields. The interest rate at the BOJ was once negative for many years. We know they just changed their monetary policy to a positive interest rate, but they're still behind the curve and behind the ball. Their currency is not as valuable right now. People are putting their money into other fiat currencies before it is yen. So right now we're going to see if price can get lower. Let's see. Peace.